You guys are steeped in this stuff every day. The question was whether or not you believe AI is a bubble, which I think is the place we would probably start this conversation anyway, given that I know that's top of mind for everybody. But maybe, Bill, if you want to kick it off.
Sure. Oh, thanks for having me again, Leslie. It's great to be here with my friend Philippe. I'm going to say, be a little bit maybe controversial, not a bubble. And I say not a bubble because I think this is a very real tech cycle. I think back to the PC cycle, the 80s, the internet cycle, the 90s, the mobile cycle of the 2000s, cloud 2010s, and now AI. And this will be a very, very real market, will create a lot of value. I think there will be a productivity payback long term. So I don't think a bubble, but I do think moments of overvaluation, moments of misallocation of capital, sure.
And Philippe?
I'm always concerned about something. There's always something that can go wrong in life. I would say when you look sometimes at previous bubbles, it's not obvious necessarily who wins. So could we be making the mistake of thinking that someone who appears to win ends up not winning? That's one type of mistake. And the second one is that if AI becomes so successful, you could imagine the economy growing very fast, but a lot of job destruction along the way. And it's sort of odd to be in saying, listen, we love AI, we love everything it can do, but also does it lead to a lot of unemployment?
Yeah.
And so that's maybe more of a 10 or 15-year concern, but I sort of think about it already now a little bit.
So maybe bubble isn't the right prism to be looking at the broader concern as it pertains to AI, whether it's a bubble or not, but what it ultimately does down the road to society.
It does feel, and Bill interject too, but this wave feels like the changes are going to be dramatic in the future. Like in 5 and 10 and 15 years, the world is going to look potentially very different than today. Maybe people said the same thing with computers or with the mobile internet. The changes were maybe a little bit more incremental. This goes at the heart of replacing humans in both white collar and blue collar, and drivers and cars and humanoids. There are going to be a lot of changes.
I agree completely with Philippe. This is almost a super cycle, and I think it's so fundamental. And one way I've started to think about it is that it's intelligence on demand. And you can imagine, like railroads, like electricity, like the internet. It's a fundamental new technology, and it will create huge markets. I think Philippe is right. It's very hard to tell all the winners and losers right now. We're too early to do it. But one thing I just want to say about it that's different than the internet cycle is that in this cycle, the incumbents have an edge right now. The big tech giants have an edge because it's capital intensive, it's engineering intensive, and it's data intensive. And they bring those assets to the table, where the new entrants, well, there'll be some winners for sure, OpenAI, Anthropic, others. But going into it and building these LLMs, building this intelligence on demand, it's the big guys who really have an edge early on.
Do you think, Philippe, that gives them immortality? The Mag 7 or the hyperscalers, that they will be in that 5-year future that you see, they will still retain that dominance? Or do you think there will be that all of this spending essentially will kind of get them to a place where they're ultimately replaced by the next Mag 7?
That's a good question, and I know that a lot of tech guys think they're immortal, or they're spending money to become immortal. Me, I'm a European, I like a good glass of wine every now and then. I realize I'm not going to be, immortal. I remember when the Mag 7 used to be called FANG and FANG++, and there's always these acronyms, and usually by the time someone knows an acronym by heart, like the Mag 7, by the way, it's not really the Mag 7, it's the Mag 10, because there's 10 companies, I think, that are worth over $1 trillion market cap. There will be another index, and maybe OpenAI or Anthropic or some of your companies, Bill, will also make it to that index someday. So I think the index will change, and then not just in the US, but you were talking to me early on, they might also be Mag 7 in other areas. Because
it's your jobs to pick who those winners will be, and given just all the uncertainties about how it does reshape our lives, how it does reshape the economy, how do you diligence something like that? How do you decide what to invest in, how much to invest in them as you seek, obviously, that next big win?
Well, I mean, for us, it's about following the entrepreneurs. And I think we're going to see a whole nother generation of, I think, great entrepreneurs. They're already at work building companies. And the thing that I'm most excited about right now is this new set of application companies who are going to basically harness the intelligence on demand and compute that's available to build new solutions, new applications that we can't even imagine. And I go back to my railroad analogy where I think that we couldn't have imagined a lot of the applications around what was possible when you had transportation on demand that way. So I think it's going to be it'll be an exciting time for us with some of the new companies that are going to come along.
I wish you had put a seatbelt for us,
Yeah.
because it's really, what a time to be alive and what a time to sort of invest and observe along the line of what Bill says. As an example, I remember this conference was called Seeking Alpha, so just to give out themes, and ideas. I don't know if I can deliver alpha, but at least I can present, alpha. If you look at a company like Intuitive Surgery, they make robots. But those robots right now, they look really complicated, but they're a bit dumb because it's still a human that's like playing with the joysticks. How long is it before a computer re-records every single surgery that's ever been done on the robot, learns, and soon you don't need a surgeon? And then that would be incredible, because think about the ability around the world in any area to be able to have an amazing surgeon. And let's say some great surgeon in Los Angeles invents a new procedure. I read the other day to do Achilles heel, to fix the Achilles heel. Overnight, you change the software of the robot, everybody around the world gets access to that new procedure. So one positive thing for me on the AI is it's also gonna make it that like maybe people who don't have the best access to everything, the cost is gonna come down a lot and it's gonna spread a lot around the world, and I hope at least it will happen in that example of the surgery and the healthcare.
I think, Philippe, that's I think great, because two industries that did not get really as impacted as we thought during this last tech cycle was education and healthcare. Like Philippe was talking about, about this robotic surgery. And I think this time, those two industries are going to be transformed by AI. And when you start bringing that kind of medical intelligence either to a robotic device or making it available, and making every doctor more productive, more intelligent, it's going to have a huge impact. And education too, another industry where again, access to education, quality of teacher talent, enhanced by AI. I think we're going to see some incredible new solutions created.
Interesting, and coming off of the pandemic as well, where those two areas felt ripe for disintermediation.
No, I have a kid who's going to high school, and yesterday we went to visit this new school in New York that is supposed to be an AI high school.
Oh,
and
wow.
when you look at the program, they really make you believe in a demo. You're like, I completely agree, you're going to learn in 3 hours what it would take 6.
Yeah, exactly.
And against that, we said, well, how many kids are there in the high school? And they were like 6. And I meant 6 per class or 6 in the high school? It's just starting. And so we went like this, and we're like, oh God, maybe education is not just AI, it's also socializing and being with kids. But in 5 or 7 years, when that high school is full, maybe for my younger kid, I'll be like, okay,
that's pretty interesting.
Try that one.
What is an AI high school? Is it?
It was one where kids learn on their own, and there's programs that are extremely aware of their strengths and weaknesses, and it's not really a teacher, it's more like a mentor that sort of gives you the confidence and the motivation to sort of learn this way. It's a new program, but even if that doesn't appeal to all of you, in 5 or 7 years, there's going to be 5 different ways of thinking about how to teach, and so
absolutely,
sort of another interesting example.
Yeah.
As we think about opportunities, there's been a lot of discussion about how much is in the public markets versus how much is in the private markets. How do you think of that? How do you think about that? I know, obviously, General Atlantic is primarily in the private markets. Cotu, a little bit of both.
A lot of both. No.
A lot of both. Do you agree with the notion that the private markets are where the opportunity is right now, or do you feel like there's there's a blurring of the lines between the two, and that you can find opportunity anywhere?
Well, I'm glad to have friends like Philippe so I can get insight in what's happening in the public market, because we do focus on privates. But I think you have to understand both. As I was saying earlier, I really believe right now that the people driving the change in AI are the large public tech companies, and I think the incumbents have that advantage. So if you don't understand what Oracle is doing, what Google is doing, what Microsoft's doing, you really can't invest in the private market. You really can't make good decisions. So even if we're not making investment decisions on the public side, we have to be pretty fully aware of what they're doing, and that's how we synthesize it into our decision making.
Yeah, and in our company, we do everything from seed to privates to publics. On one hand, you could say, okay, maybe we're at an advantage because we know both about publics and privates. But on the other hand, the mindset to invest in publics and privates is different. Mm-hmm. I would say sometimes the mindsets of public and venture can be the same around thinking about big ideas, but on the public side, it's not only you have to believe in the future, but you have to think, but is it already priced in or not? Like when Oracle goes from 50 to 350,
yeah.
At 350, it's like maybe the idea is already priced. And on the private side, because usually things take longer, you have to be more right, you have to be more patient, you have to be active in your companies, you have to support the founders or the CEOs a lot. So I would say that if you can do both, great, but they're definitely a different skill set. Yeah. Sometimes I wish I was only in one or the other. Sometimes I'm happy to be in both.
The nice thing about private is just, as we were saying before, I think this tech cycle plays out over a longer period of time, and I think there is a duration that you get from being a private investor, more of a 5 to 7 year horizon that allows you to sort of play the cycle a little bit longer than sometimes I think the public markets are more demanding for shorter term performance.
Do you think it makes sense to fix the IPO process if the IPO process is broken? Or does it make sense to democratize alternatives to give more retail investors access to private companies, given just the leg of growth that they're in and that companies are staying private for longer, and you have OpenAI valued at $500 billion at this point as a private company?
I personally think that the IPO market is totally broken, like beyond repair, as measured by the fact that 20 or 30 years ago, there were so many more IPOs than today. Today, there's very few IPOs. We were talking earlier, this year there's been almost none. And I think it's not a great trend, because at the end of the day, it's just easier for a retail investor to be involved in IPOs and then onwards than everything before the IPO. So I find it's a little bit unfair. I do think that it's going to get fixed purely through competition more than through a regulatory action, because when private assets get tokenized, the byproduct of being tokenized is you in essence become public, because now you could trade at a premium to the price of the token, you could trade at a discount to whatever the token price was issued. Yeah. And so all these people that are privatizing, tokenizing private assets, in essence, it's making them public. And so I think that one day maybe all assets are going to be public and tradable, to the point that maybe some companies then are going to miss, like, oh, yeah. I wish I was we were not tokenized. And I think there's going to be a battle between companies that choose to be tokenized and some cases say, I don't want to be tokenized. I don't want to be subject to the whim of investors putting a daily, maybe on a per second value.
Per second. I'm a little more optimistic about the IPO market. I think we've had an exit recession in private markets for the last 3+ years, and some of that was regulatory, some of it was just some of the trends that Philippe was talking about. But I think we started to see some green shoots around the IPO market this year, and it was just unfortunate that the wind was taken out of our sails a little bit when we had the government shutdown. There were a lot of high-quality companies on file, ready to go, that would have gone public in Q4. I think built some momentum going into 26. That got stunted, and I hope it'll come back. I think it will come back in 26. I think there's still, while the balance may have shifted towards privates, I think there's a desire among public investors to have high-quality companies come public.
Yeah, and of course now you've got Thanksgiving, Christmas, so this year
it's tough.
Becomes a little more challenging, and they could have done so at market highs.
Yeah.
I want to ask you kind of about international opportunities as well. I know, Bill, you just got back from, what was it, a couple weeks?
2 weeks, yeah.
Abroad, including China. And just real quick before we get into just the broader global environment, on TikTok, is the deal done? We see the press releases, we see the executive order. Like, is there a bow on this deal at this point?
I think we're on track to get the deal done as it's been reported. I mean, there was when the framework agreement was announced in September, there was a 120-day clock on it. That puts us into a closing in January, and I have every reason to believe it's going to work out on schedule. And so I don't think there's any reason to be concerned.
So January, right when the IPO market opens back up.
Let's
all
hope.
happen at the same time.
Let's hope it opens
2026 is our year. Philippe, I took a look at your 13F going into, which I know is very delayed because the deadline is tomorrow, so we'll get a fresh one tomorrow. But you had pretty limited international exposure, at least on the long side. I'm curious if that was by design, if that was a reflection on kind of your view of international vis-a-vis the opportunities on the public side here.
Our view of the world is that the US is the greatest country and the greatest place to live, and even more so with AI. We have all the engineers, we have all the new great AI companies, and we're dominating the world of AI. In Europe, for a while, and I can say this being French, I thought that MAGA would lead to MEGA, make Europe great again. Europe is completely stuck in reverse. It has this sort of European government. It's really the United Nations of Europe. It's not the United States of Europe. They can't make any decision. It's very bureaucratic. Plus, they can't invest in AI because they have to invest so much in energy and defense. So it's difficult to make an encouraging. Now that said, the European markets were very strong this year, so I could be totally wrong. Bill and I share that I think China is an incredible market just because they have very good engineers, and it's a big captive market. Yep. Me personally, I still prefer, for the time being, to invest on the public side of China. I respect all the geopolitics, and at least on the public side, you could choose to change your mind. As some of these big Chinese private companies go public, I think it will give investors confidence to reinvest in China, but we also have to invest in China very much with the rules and regulations that the US government imposes on all of us, and it's definitely a set of constraints. And then in Asia, I think Japan, Taiwan, and Korea, especially on the semiconductor side, have a lot of interesting things going on, but I really, at the end of the day, would be like 80% plus of the action is in the US.
Yeah.
And Bill, what did you learn from those travels?
Well, China remains a strong innovation economy, and they have half the world's STEM engineers. They've got a very large home market. They've got 1 billion plus internet users. So I think it's a very exciting place. I think if we were here a year ago, people would have said China was uninvestable. This year, China is investable again. Their equity market's up over 30%. Their trading volumes are up 100%. They're the market leader right now in IPOs this year with 80 IPOs and high volume. So I think you're seeing a real, reacceptance of China, or investors becoming more comfortable investing there. And I think we're going to see tremendous innovations. I actually agree with Philippe on Europe, unfortunately. But I think in innovation, it's a two-horse race. I think it's US and China.
Who's winning right now?
Well, I think they're both going to be strong. I think both have very large home markets. Both have significant engineering talent. And if you look at areas like AI, they've got their leaders as well. Alibaba, Tencent, ByteDance are very strong AI competitors. I'd say in robotics and industrial automation, I think they're ahead of us right now to some extent. So I think it's, but where I net it all out, though, is that at the end of the day, two incredible centers of innovation that investors should be exposed to, for sure, private investors.
I believe we have an audience question.
Yeah, we have a couple on the app, but I'm going to go the old-fashioned way. We have a question right here.
Hi, this is great. Thank you for your insights. Could you talk about some of the trends in the cost of compute, and whether, in terms of bringing on these applications, but certainly it seems like the costs are just exceeding at this point, where those inflect, and what does that ultimately mean for the cost and the return on investment for the applications going forward, and what's the risk to the companies that may be running business models at losses today thinking about the future costs coming down, whether they'll be viable in the future. How do you think about that in terms of investing in those companies?
Yeah. So if you think of the cost of compute, you can measure it by tokens and the cost of a token. I think of token to AI as like a gasoline to, let's say, an engine. And it's sort of strange because if you were to say, well, as price goes down, P times Q should go to 0 if P goes to 0. But actually, P times Q can go to infinity even though P goes to 0, and that's just the elasticity. I think if the price of tokens goes down, and it's going to go down very dramatically, the elasticity and the things that we can do with the lower price of token is almost infinite. We just mentioned, Bill had a few examples around education and other spaces. I mentioned surgery. But you can imagine as the price of token comes down, so many things are going to be able to be done, and not just with the intelligence in the software, but intelligence in cars, intelligence in humanoids, intelligence in machines. So I'm sort of fairly optimistic that for a long period, a decade plus, at any decrease in the price of a token, the overall P times Q will still be growing extremely fast.
Yeah, we have about 200 companies in our portfolio, and we've been applying AI, even at this level of cost, to them pretty aggressively, and we've seen very high paybacks already in areas like customer care, coding, digital marketing, and I think those are just the front edge of applications or value add that's going to be available by applying AI. And I think, as Philippe said, as the costs inevitably will come down, I think it's going to open up more solutions, more applications that are going to have productivity paybacks.
It's a related question, but are you concerned at all about the complicated lending and kind of the circular economy going on between the big AI companies and some of the semiconductor companies that we've heard a lot? There's always the headline every day about this billions of dollars going towards compute and those costs. Are you concerned at all about maybe there's not enough transparency around some of those moves?
I think on the public market side, Bill, you can, if you want to address the private side, you should definitely study what's going on. And I think there's sort of like the naysayers have a little something in the debate. But if you compare to year 2000, in year 2000, all of the capital was fueled by IPOs and was fueled by new companies with sort of fairly dubious business models. Today, the capital, and if you think the wealth of the world, right, these Mac 10, and I'm exaggerating a little bit, but are producing, let's say, almost $1 trillion of free cash flow. Maybe it's 600-700, growing to $1 trillion, but close to $1 trillion. They have no debt. Everybody else by the Mac 10 probably produces no more than another 1 or 2 trillion of free cash flow with a ton of debt. They're very encumbered. So the world equity is really concentrated in these 10 companies. And these are not investments that are made by the government or that are made by companies with debt or that are made by the capital markets. These are investments made by companies with real boards, return on capital requirements, and things like that. So I think the system is pretty healthy, and the actual implied leverage in the system is small, like these little things that NVIDIA is doing is small. The fact that AMD wants to sell a little piece of the company, but they get to be potentially the number 2 player. I could see how that actually is a good move, that makes sense. So I'm watchful, but if you tell me, like, am I worried about it? Not yet.
I think what it's telling you is that these large companies that are taking that capital and investing in each other or investing is because they think there is a real significant opportunity at the other end. And Philippe's right, the earnings are following through. They're getting revenue now, they're getting earnings now. And yet I think they're all fighting for a very, very big prize. I mean, the ones who win the intelligence on demand game are going to sell a heck of a lot of compute and a heck of a lot of capability. And I think they're right to say we've got to invest now to win that. And I think what's amazing about they're getting a payback. I mean, the amazing thing about the valuation increase of the Mag 7 is the earnings follow through. This wasn't a case where you doubled or tripled PE ratio. It was a case where the earnings were there, which is what's been so remarkable to me.
Yeah. Fantastic questions, and thank you both, Philippe and Bill. so great to have you on a day like today where this is front and center for everyone. I feel like I learned a lot from the conversation. I hope you all do too. We covered a lot of ground, so really appreciate your time.